Is the lock-in effect still in effect? Or are lowering interest rates causing sellers and homeowners to feel the FOMO effect, right? And getting more properties out into the market? Maybe so. But there's a report that also came out that actually rears its ugly head of inflation once again. Is this going to cause interest rates to go up again? We're going to talk about that as well here with now bid wars starting as well. I'm going to let you know what goes on behind the scenes in the underwriting process, the details, and maybe give you an idea of what you should expect and what you should do whenever your offer gets accepted. And speaking about offers being accepted, now's the time because of a lot of buyer demand and low inventory for bid wars. Are you ready for bid wars? As a real estate agent, are you prepared to guide your clients through the process of putting in offers through a bid war? Well, I'm going to share with you some tactics and strategies here. Yes, albeit with an article that I read here. I read it with you so that you can have first-hand experience and knowledge about what is happening here. How's it going? My name is Luis Torres. I am a real estate broker here in the Chicagoland area, helping folks around here have a smooth transaction. And I love to just teach people what I have learned as well, right? I every day am studying prices and homes every single day. I'm studying also what it takes to be knowledgeable, right? We are in the news. We are in the world just trying to figure out what's going on in the world as far as economics go, major events, that all of that stuff that affects the real estate business that we have, so that we can let our clients know and ourselves be aware of what's happening so that we can better, form a strategy to help our clients out. If you are looking for someone that can help you with a real estate transaction, obviously, if you're a member of the public, make sure to reach out to me here at 630-777-4597. But with that said, let's get into the news. Here in this screen, basically all that you see here in this screen, right, is I got articles here to the right of articles that I've highlighted, that I've been reading and trying to get some more information. And now I know, even this past week, I put in a listing, and I know what it's like to do a Google search and continue to just refresh the memory and to, just read about a certain topic. And often there are things that have happened, that have come across as far as knowledge goes and whatnot here that you might have forgotten, right? So it's good to get a refresher. So that's what I do here on the right side of your screen are articles that pertain to the news of the week and has also some very important information and data that you can use even this week here, now coming on the third week of the new year of 2024, that I think will be relevant for you. And also on this screen here, you have my weekly market report there on the left top side. That's just a banner letting you know any given moment what's going on in this video. And finally, on the bottom left hand side of the screen, you're going to find here the running hot sheet here in the area. Because I am a real estate agent, because I am a broker who is looking to, find whatever is profitable and useful for my clients, I want to make sure that I have the most useful data here. As a matter of fact, I see something here that came up just about 21 hours ago, according to this, and it looks pretty promising here. This is a 2-unit, 2-bath home here in 16 North Russell Avenue in Aurora, Illinois. And I think this one actually is pretty good. I think I will let my clients know about this as well. Or if you yourself are thinking about buying a 2-unit place here in Aurora, boom, this just in, right? It hasn't been just a few hours, but it literally has been less than 24 hours that this 2-unit place came on the market for $239. I think that's a pretty reasonably priced. Even if you price both of these units at, let's say, $1,400 each, $2,800 a month, that does cover the 1% investor rule. So if you are interested in this property, make sure to reach out to me as soon as possible, because if you wait till next week for the next meeting to occur here on my YouTube channel, it might be just too late. Anyway, that's why we have the running hot sheet going on, and I have not seen anyone else on YouTube nationally, even locally, have this kind of information out there. I'm telling you, I take my information very seriously, and I take my business very seriously. And if others are doing this, I don't care. I'm really focused, laser-eyed, with the blinders on what I can do to serve the public the best way I see how. I don't take information from all sorts of other realtors and try to figure what everybody's doing and then try to fix. No, I know what I need to look at. I know what I need to focus on, and then that's what I do. So one of the ways in which I service my customers is by being aware of what's happening in the news. And that's why this week I have these top stories that I feel are the most relevant moving forward here. Now, in housing news, right? What is going on here? Well, HousingWire.com has put up an article here that speaks about the lock-in effect. Now, this was written this week by Sarah Marks here in HousingWire, and it's basically saying that more homeowners might be ready to sell despite the lock-in effect. What's a lock-in effect? Well, because of interest rates being so low just a few years ago, 2%, 3%, even 4%, it has enamored homeowners into, getting that deal locked in and not moving anywhere. In other words, I got this at a good price and I'm not selling this house for nothing, right? So that's what the lock-in effect is. And who is, or what percentage of homeowners currently have a favorable interest rate? Well, according to this, it says here, 88.5% of mortgage US homeowners have a rate below 6%. What is it again? It says, as of the third quarter of 2023, 88%, almost 89%, almost 90%, if you round it out by tens, almost 90% of homeowners right now have interest rates below 6%. According to the Mortgage News Daily, the interest rates right now, we're looking at about 6.6. So we're still above that number, okay? So the vast majority of folks are still underneath that percent. So if folks are selling for monetary reasons, if folks are selling because of interest rates being favorable at the time, they're going to be hard pressed to want to sell because still the numbers don't add up for them, right? Now, there are other reasons why folks will want to sell, but at the moment they're not looking to sell because that is not, at least the interest rates are not where they want it to be. I've spoken with many folks who are looking to sell a home when interest rates become, below 6%, around 5%, around 4%, because it makes sense. Look, that's 89% roughly have a rate below 6%. 78.7% have interest rates below 5%. Almost 60% have it below 4%. And just 22.6% have interest rates below 3%. Okay? So if those folks have that rate, they're just in love with it because they know that they have something that is really nice. Now, there are things that will cause them to want to sell, but that's just the thing, right? If it's about interest rates, then it doesn't make sense for them to sell at the moment. All right, so the share of homeowners with relatively low rates has fallen from its record high. All right, according to a Redfin study, that number of homeowners opting to bite the bullet and give up the low rate is going down. In other words, 92.8% in mid 2022. All right, those people again that have an interest rate below 6%. Remember how I spoke about, according to the Redfin report, the end of quarter 2, 88.5% have interest rates that are 6. It used to be 92.8. So the purpose of this is to say, according to this article, is to say, hey, even though a lot of folks still have interest rates below 6%, the number of folks that have that number is starting to go down, okay? So in other words, there's a shift happening now. More people with favorable rates are starting to make a move. That's what they're saying here. Now new listings are coming up. I highlighted here, many homeowners choose to sell, and this is the reason why folks choose to sell, right? If it's not for interest rates, they sell for another reason, right? It could be major life events such as a marriage, getting married, right? They choose to sell their home because something, maybe a new child came through, a new job, they have to relocate, maybe a divorce occurred. Others simply want to move to a different house or city because they're just tired of living there, right? The lock-in effect, I mean, even though some folks would love to hunker down, eventually that wears out and, the 3% mortgage rate, 4%, becomes too boring for them, I guess. I don't know. But the point is they decide to move. Or maybe they decide to rent it out. But according to the Redfin article here, more homeowners might be ready to sell. So that's good news for the market. Hopefully listings are on their way up. All right, and that's what it says here. The lock-in effect is still real, but listings are starting to pick up. Declining mortgage rates appear to have helped the inventory situation somewhat. All right, somewhat. And the fact is, yeah, folks are starting to realize and I guess come to grips with the fact that the 3% mortgage rates probably never going to happen again, right? So because of that, them waiting to have interest rates drop to the 4%, 5%, 3% levels are just not going to happen. And the sooner they realize that, the sooner then they can pull the trigger, according to this, and sell, okay? But a lot of sellers are still worried about finding their next house because even though, yes, listings are on the rise, most buyers are sellers. So even though, this is another scary thing, it's not just scary enough to leave the interest rates that they love, that they just love. They probably had that big old 2%, 2.85% framed on the wall in their house or something, just like, hey, look at this treasure that I have here. But, not only is it scary for them to leave that nice interest rate, but those that decide to sell also have to embrace the ominous clouds that are coming at them. And that ominous, scary looking cloud is the buyer market, right? It's not a buyer's market, no, it's the seller's market, really, because most buyers are sellers, right? Most sellers are buyers as well. They have to find another place to go to. And so that's the thing that we got going on here. And so it's tough for them to sell a home and then go out and try to find a place. Now, we're going to talk about bid wars here just in a little while in this video, but I just want to let you know that's what's happening here in the market. That's the sentiment that, sellers are facing. There's a group of homeowners, it says here, who are sitting on enough equity to justify selling their home and taking a higher mortgage, okay? So that's what is happening here. Folks, even though they don't want to let go of their interest rate, they do have plenty of equity. Now that's a good trade-off, isn't it? Because of the rates that they locked in, and they're, in a sense, feeling locked into their home, the good compensation, I guess you could say, the good trade-off is that, yeah, their home has by and large increased in equity, especially if they had it for, longer than 6 months, longer than a year. So I read here the article and the statistics about what interest rates are here available to them. It says here, affordability remains an issue even if mortgage rates started to trend down. And that's the truth, right? Affordability. The monthly payment on a median price U.S. home with an average mortgage rate of 6.62 costs $2,300, almost $2,400. And that is down. That is down from an all-time high in 2022. But yet it's still up from a year ago. So, affordability remains to be an issue there with just homes not, moving so quickly and hitting the market because of this lock-in effect. Yes, it is still real. And you know what? Folks are starting to realize, look, it's not going to get any better. Let's just go ahead and make a move now, okay? So that's what that article states there, and that is the condition of some folks here in the market. Now let's talk about interest rates real quick. This week we did see, it's spoken about here in the news articles of the inflation data that came in. Now inflation was at 9% just a while ago, and it was driving people, to have higher prices. And now we're starting to see that number is starting to go down. In fact, it went down to 3% or so, and that started to decrease the amount of folks that are looking to make a move. Now with interest rates looking a little bit higher now, it's kind of scaring some people away from taking action. And so according to this article here, for those seeking evidence that inflation will soon be back at the Fed's target level, it wasn't the triumph it might have been. So it looks here that inflation might still rear its ugly head, and that could cause some folks to get some sort of agitation, like, hey, our rate's going to go back up again. Are we going to start to see 7%, 8%? Is it going to happen? And you're going to start to just pull out your hair thinking about the interest rates going up again. Are we going to go through this again? Well, investors, if you want to see them as a gauge of whether should I panic or should I not, investors took it in stride, it says here, and they're still expecting the Fed to continue to cut rates sometime this year. So the mortgage industry doesn't seem to be perturbed by the fact that the inflation data showed a report that went up. I think it was 3.1 in inflation. It went up to 3.4. So it's not looking like it's crazy huge number. It's not jumping to extremely volatile levels. And so that's why some people might see this as nothing huge to be concerned about, even though it was not something that we wanted to see, as last year we were clapping and applauding the fact that inflation finally went down and the Fed was saying that they were not going to raise rates, and everybody was jumping up in arms. At least that's what I imagined. That's how I felt inside, right? But now, with this little report here, it doesn't look like it. In fact, it says here, this week's report definitely stopped short of providing resounding confirmation that inflation is defeated. That said, it didn't send any signals that were too troubling either, okay? So even though the report wasn't that positive, it didn't make or, mess with the apple cart, like they say, okay? So real quick here, let me just share with you here what the interest rates are as of Sunday here. Sunday being the 14th of January, week number 3, the start of, and interest rates are at, here we go, interest rates, there it is, 6.69, okay? So 6.7, not even close to 6.5, which is the mid-level, but it says here, inflation data keeps low rates hopes alive. Okay, so that is good news for those looking to purchase something this year, is that still the forecasts remain positive and optimistic that rates will be at that level. And last week, if you want to watch my previous video, we did speak about why other folks think here, real estate market experts believe that rates will be hovering around the low 6s, even high 5s sometime this year. So if you want to have some more information on that, make sure to click on that video there as well. Moving along, same thing, speaking about the inflation numbers, according to Forbes.com here, just it says here that December CPI reading is a potential red flag that the U.S. inflation problem may be more persistent than policymakers had hoped. All right, and what should be most important for investors is that the Fed is done raising rates. So whether they cut in March or cut in June, and whether they cut 4 or 5, 6 more times, or whatever the case is, shouldn't matter too much. So again, the same deal here with Forbes.com, as they put out an article here just recently, January the 11th, by Wayne Dugan, I think that's his name, Dugan, that spoke about the inflation numbers. So nothing crazy, even though inflation did rise up. As far as the mortgage investment side goes, we don't see that messing with inflation numbers anymore. But now that you have yourself inspired enough to, get out into the market and start to shop around for homes, and you start putting out offers, and let's say it gets accepted, right? Well, you need to know what to do when that happens. Now, obviously, if you are buying cash, all power to you. Make sure to provide a proof of funds. When you get out there into the market, you're not perturbed, right, by the inflation reports. You're not perturbed by the buyer's market or the seller's market or whatever the case is at the moment that you're watching this video. But you made it out there, right? So congratulations, you got yourself an accepted offer. But now what? Now what happens? Well, let me tell you that while you are waiting for your loan to get approved, you're out there, just wringing your hands, making sure that everything happens. Let me give you an idea of what happens here in the underwriting process. Now, I went ahead and searched it up here, and I like to look at RocketMortgage.com only because they have some very interesting and easy to read and easy to understand articles, okay? I'm not affiliated with Rocket Mortgage. I'm not getting paid by them, even though I wish I would. Who doesn't, right? But the point is that they have some really good information for the public. And so since this is a public site, the public information, I choose to read this with you and, basically provide commentary and some, opinion from a real estate broker to help you understand this. Now, underwriting, right? Because once you get approved, what's going to happen is you're going to have your loan application now formalized, right? Because even though you got an offer accepted, even though people can clap and say, congratulations, you're not out of the woods, right? You're not out of the woods yet. Well, what are the woods? What are the woods? Underwriting is a crucial component of the mortgage process, and that dictates whether you will get a final loan approval. In other words, again, underwriting is a process of your lender verifying your assets, verifying your income, verifying your debt, credit, property details. All of that work is done behind the scenes, and finally, they will issue that final approval on your loan application. But that's the kind of work that they do. An underwriter is a financial, professional there that is examining and studying your situation, right? They will assess your finances and they will assess your credit history to determine your credit worthiness. And hey, are you able to pay off your debt or not, right? That's what they're going to examine. That's what their job is, to make sure that this risk that the bank is taking with you is going to pass, and that you're going to be a person of your word, right? And keep those payments coming. But it's not just enough for you to say, oh, please, yes, I will pay the debt. Yes, I will. It's not enough, right? You need to provide documentation and prove that you have the wherewithal to make this happen, okay? And they have their ways of doing this, and it's not like 2008 during the financial crisis and the mortgage banking crisis that occurred, where they were giving out loans to anybody and everybody. Nowadays, even up to this year, 2024, mortgage, the lending has been more strict in giving out loans, so it's not like we're going to see something like that anytime soon. However, this is what you should do. An underwriter will do this: investigate your credit history. They will look for late payments, they will look for bankruptcies, and examine your credit history and more. What else will they do? Well, they'll order an appraisal. They'll order an appraisal to make sure that the loan amount is going to be, it can match the home value. They'll verify your income. They'll verify your employment. That's what they're going to do. Make sure that you're not lying to them, or that you didn't quit your job at the last minute and say, yes, I got the house, it's mine, and now I can quit my job and just wait for this process to finish. No. As a matter of fact, if you lose your job during this process, very likely you're not going to get that final approval. On top of that too, if you apply for a major loan, such as a vehicle, you better rest assured that you will be driving away from that loan approval as well. Another thing they do, which is a very big one here, is they look at your debt to income ratio. In other words, your DTI, which is a percentage that tells lenders how much money you spend versus how much money you bring in. And they make sure that you have enough cash flow to cover your monthly mortgage payments, including the property taxes and homeowners insurance. That's what they will do to make sure. And they want to make sure that you have enough of that. And they also calculate the closing costs, right? And the down payment, everything you're going to bring in, they make sure that before they give you their final approval, you have the wherewithal to make sure that you get those payments done. They'll verify your down payment and savings. What is it they're going to do? They're going to look at your bank account to make sure that you have enough in savings to make a down payment at closing and supplement your income if you ever experience some sort of financial hardship. They will make sure that you have those resources available in liquid even. How long does this underwriting take? The sooner all the necessary documentation. So this is where you come in, right? You have to provide and answer these questions in a timely manner. If they ask you for something, quickly respond and provide those documents. If you take your time and you wait till the weekend, then it's definitely going to cause the underwriting process to take longer. And obviously, if you're under contract to be finished with the entire process by a certain deadline, which most obviously contracts do have a deadline, it's going to really come up against a last minute effort to make sure that it gets done. So you don't want to put your offer in jeopardy and risk losing the home just because you couldn't find the time to find these documents and answer these questions. So make sure that if your lender is asking you to bring this and bring that, do all you can to stop what you're doing and bring those documents up to them. All right, they must verify you earn enough income to cover your monthly payments. This is what they look at: your income. They look at your W-2s from the last 2 years, your 2 most recent bank statements, and your 2 most recent pay stubs. Make sure to have those. And even while the process is going on, your lender will ask you for the more recent paychecks, right? They want to continue to see that flow coming in. Also, and now if you're self-employed, there are things they look at, such as profit and loss statements, sheet or document called a K1, a balance sheet, business tax returns, etc. Okay, so make sure to ask your lender for that kind of information. And now appraisal. An appraiser is going to come in and take a look at the property, make sure that it is up to the value, right? They're going to evaluate it. Now these appraisers are very much in line with professionalism. They've gone to school. They've gone many years in school just to study this very fact. And so they will protect you and they will protect the lender, right? Because an appraisal can ensure you can only borrow that which the home is worth. Professional an appraiser, not an inspector, that's a different one, but a professional appraiser will inspect the property. They'll walk through the home, they'll take pictures, they'll take measurements, they'll assess the condition of the home. Now, watch out for another video that I make speaking about the FHA appraisal process, as they have their own checklist that they look at, and if it doesn't come up to standards, then I can also put the property at risk of not being purchased. So just keep in mind of that. And they do all this to determine the home's value. They compare the home to the most recent comparable properties that sold within the last 6 months. Okay, that's why us as professional real estate brokers, we have our broker price opinions, we have a comparative market analysis that we look at carefully, like with a fine-tooth comb, and we look at not just the last 3 months, but the last 6 months. And it would be unprofessional of me or other brokers to look at maybe even more, 2 years, of data. Of course not. We don't want to do that. We want to make sure that our comparison is in line with what appraisers are looking at as well. Why would we do a disservice to you? Another thing that underwriters do, as we wrap up here, this few minutes left here in this video, Because I want to give you the most information possible so that you can, as a real estate agent, educate your clients and make sure that they are aware of what's happening. They look at the credit, right? An underwriter also evaluates your credit score, and that shows how reliably you can repay debt. For a conventional loan, your minimum credit score should be at least 620. Okay, and for an FHA loan, the minimum credit score is 580 or even a 500, but you got to put in a 10% down payment. Now, speak with a lender for more detailed and specific information as it pertains to you yourself. All right. And let's just keep going here. They look at asset information. Assets, since closing costs can range from 3 to 6% of the total loan amount, lenders also use assets to ensure that you can cover your mortgage payments after paying your closing costs. How to have the best underwriting experience is here in the rocketmortgage.com article written here for your benefit. Listen, how can you have the best underwriting experience? Now, this is written for the consumer. Now, if you're a consumer watching this video, of course, take note of this, especially if you want to apply for a loan and know what's happening behind the scenes during underwriting. So that way, you don't make a mistake and not get the approval, right? Let's say that because of your tardiness, you took a long while getting the documents in and whatever the case is, or you hid something from the lender that caused delays and maybe put the home offer in jeopardy, make sure that you take these tips. Number one, don't apply for any new lines of credit during underwriting, okay? Because that can cause problems. It can interrupt the process, all right? And obviously, avoid making any purchases that may decrease your assets. Now, once you close on your home, you can move ahead with any planned purchases, okay? Tip number two, respond to inquiries as quickly as possible. All right, respond to any questions or respond to any requests from your lender as soon as possible. And finally, and tip number three here is be upfront and honest about your finances. If they ask you a question about this, or there's some blight or some blemish in your credit history, make sure to just say that up front, right? And provide explanations for this, because it's going to come up. But the bottom line again is this: underwriting simply means that your lender verifies your income. They verify assets, debt, and property details to issue final loan approval. All right, and that's what is happening here when it comes to the underwriting process, as you are faced with the multiple bid situation. Finally here, how to win your bid war. Just 8 tips real quick here. What's a bidding war? Basically, it means when there's multiple buyers putting up multiple offers in a situation, and if you can find yourself caught in one as a buyer, as you see myself right now, I'm currently in a bid war even as we speak. But I am in the right side, right? I'm in the easy side. I'm a listing agent fielding multiple offers in my inbox here. But if you find yourself trying to win a bid war, then for yourself, do this, right? When you set up a offer, make sure to have the pre-approval letter. When I'm assessing whether or not a person is going to be worthy of, let's say, my seller to consider, if they see an offer as something worthy to accept, but there's no pre-approval letter, how are we supposed to know whether this person is creditworthy at all or not? And I've received some offers that have no pre-approval letter at hand. So that's a big flag there. Okay, number 2, make sure that you have the highest offer. Hey, maybe offering more money can get it. And sometimes offering too much money is not the best action out there. So if you want to know if it's time to raise that offer price, then ask that real estate agent, ask the listing agent, ask that agent whether or not there are other offers. And if there are other offers, ask them if they can give you a number. If they can't, then ask them, hey, well, are they strong offers or are they basic offers? Can you kind of give me an idea? So ask that question, and that can help you with how much income or offer price you can offer. Offer an all-cash deal, number 3. Offer an all-cash deal. Cash is king, they say, right? So that way, that cash offer usually goes on the top of the list because there are less contingencies as opposed to one that has financing. Number 4, speaking of contingencies, maybe you do have a financing offer. Well, you can still drop some contingencies. You can still go as is condition. You can bypass inspection, even though it's not recommended. It's not advised to do so, but there are contingencies. Now, what is a contingency? It's basically like an off-ramp that you are giving yourself an allowance to get out of the contract. A listing agent wants to have the person purchase the property, right? The buyer purchase the property as little as exit ramps as possible. All right, so the less the better, right? That always works out as well. Number 5, you can skip the inspection. Number 6, you could be available. In other words, be available, right? If there's a phone call to you asking you more questions about your offer, then another key is to remain competitive, is to keep yourself available, right? Answer the phone and be ready to answer any questions that will come up about your offer, right? Number 7, make a backup offer. Backup offer means that, even if they have accepted an offer, still make yourself available in case that offer were to fall through, okay? So that was number 7. And number 8, the final one here is, again here, it's just making sure that you are available, right? And just be attentive. Now, sometimes realtors don't like to have folks giving them a call and try to befriend them. But hey, at least if you show yourself to be diligent enough to, just be attentive and alert and know that you are on top of it, that's a great way to stand out among others who just simply email an offer. All right, so that's the tips I have for you. So basically, once again, this week, the same old when it comes to rates. Nothing crazy has changed. The CPI report, the inflation report has come up. It looks a little weird, because inflation went up a little bit, but, investors and the real estate market as a whole are not panicking at all. And we are still starting to see more listings hit the market, as we've seen that number go from 92% now to 88%. So we do see some more listings coming up. And now that it is January, historically every January we see more uptick in listings coming up, so that's what we will see here more. But with more listings come more opportunities for buyers, and even though it's frigid outside, we're looking at -3, -35 wind chill this week here in the Chicagoland area. You know what? People are still out there. My agents that have given me a call here have said, I can't believe we're out here in the field with this weather, but hey, buyers want to buy. And so what we're going to do is we're going to keep on working with the public. If you are interested as well in buying a property anytime soon, feel free to reach out to me here in the Chicagoland area. Phone number 630-777-4597 is my phone number here. Like I said, I am a realtor here in the Chicagoland area. As you can see here, I'm looking at my hot sheet, just looking at properties to see what else is out there for sale. I'm telling you, I'm going to look at this 2-unit building here in Aurora's west side just to see what else is out there. But there's other parts here in Naperville and other parts that are also looking promising. Anyway, with that said, if you have any questions, feel free to reach out. Don't forget to like this video, leave a comment if you have any questions or you want me to cover something in general, and don't forget to subscribe. That also helps me out to see if there's anyone else out there that looks for this information. With that said, thank you so much for watching this week's weekly market report, and I will see you again next week.